I think there's a complete consensus on what the central bank is going to do, which is to keep rates unchanged. And I think they've already surprised us last month, and I mean the last review, and I think that whole path is going to continue. The bigger question mark is on the stance, and stance is basically, like you mentioned, withdrawal of accommodation. What would it do at this point? To our mind, I think there's going to be unanimity amongst the committee on the decision, but not so much on the stance, because there are a couple of doves in the committee who would like a shift in the stance to more neutral in a way that you're basically essentially closing the door on further rate tightening. Our take is that the central bank would prefer to keep the stance unchanged, which is that withdrawal of accommodation. And the reasoning behind that would be that, even at the last meeting, even in the intermeeting comments, what we glean from the rhetoric is that while inflation is quite low, particularly this quarter, the central bank is wary about the path ahead, at least in the next couple of quarters. There are uncertainties on the outlook, especially on food prices and some of the weather inclement weather. So because of that, they would like to keep, I think, the option to react if required. That said, after the April review, we do think that the bar for further rate hikes is still quite high. But I think what they would perhaps signal with their stance is that they are prepared to react if required.